I'd like to introduce Guy Goldstein from Next Insurance, who has come all the way from California.
Hi.
Hey. So thank you very much for joining us. And this will be our final panel, and we're going to talk about the wonderful world of small commercial insurance. Guy, why don't you kick things off by talking a bit about what Next Insurance does and what your business model is and what's the problem that you're trying to solve within the industry.
Okay, so thank you for having me. So Next Insurance, what we're doing, we are selling insurance for small businesses in the United States. We cover all the states in the US. We cover businesses that are below 100 employees. And we are a full stack capability. So we are doing the distribution ourselves direct. We're doing the underwriting. We're doing the pricing. We're issuing the policy. We're doing the billing. We're handling the claims. We're handling the servicing. So we are doing everything soup to nuts for the businesses. The problem that we are trying to solve, there's actually two main problems today in the market. Problem number one, that it's a very outdated experience and cumbersome for businesses today to get insurance, service their insurance, and even handling their claims. So it can take weeks to get insurance because there's a lot of manual processes that are happening in the way. It takes a long time to service the business if a business had a new customer, a new employee, or they move a new location, or they need certificates. It takes a lot of time. And also the claim handling takes months to handle claims. So this is problem number one. And the second problem is that the policies in the market, because small business is so complex, there is a big difference between a lawyer or a personal trainer or photographer or plumber or a restaurant. And the policies today in the market are very kind of trying to figure out the averages. And as a result, they don't give the right coverage. In many cases, they are too expensive because they include all kinds of things that are not really needed. So there's not a good fit between the policies that are sold today to what the businesses are needing, and there's not enough tailoring for each one of the customers. And this is basically what Next is solving. We're giving a simple product, 100% digital, tailored to the business, and cheaper on average from anyone else.
So in terms of how this is distributed, in the United States, you have the SME insurance is distributed using agents. You have hundreds of agents. You have an agent in every town. Is your business model a threat to theirs? Are you competing with them to distribute directly, would you say?
I would say it's a competition, not a threat. There's not thousands, there's tens of thousands, if not hundreds of thousands of agents in the United States. We today distribute digitally and online, so customers find us anywhere on the internet or on YouTube or however they hear about us, and they come directly to our website. The process to buy the policy on our system for the customer is extremely simple. We guide them through the process, and they usually leave our site insured within 5 to 10 minutes. So it's all self-service. And then also from there on, the renewals, the servicing, it's all done automatically. However, some customers want and always probably want to work with agents, and I'm sure agents will go over time, and there'll be less and less agents over time. Like what you saw in travel industry, there was a lot of agents, and now there's very few. But there's always be some few will still would prefer to buy with an agent.
So what kind of data do you take from your customers? And also, what other data are you using? If a business comes to you and says, I want to buy insurance, what happens next in terms of your system?
So there is our advantage because we go direct to the customer is that we get a lot of information about the customer. So first we get its application, how fast they fill the application, what are the questions that they answer, how do they answer them, how many times did they change them, etc. We get a lot of external information. Which channel did we get the agent? Did we get him from Facebook? Did we get him from Google? Did we get him at 1 p.m. at night, or did we get him at 10 a.m. in the morning? And we're also getting a lot of external information, like their background checks, did they have bankruptcy, and other information. And then we combine all this information and put them into a model that correlates to the claims that we get from the customers. And then we build a model to underwrite the customers based on the data that we have and the model that we build together against the claims.
So wait, you do all of that in like the 5 minutes it takes to when they're on the platform?
No, this we're doing within milliseconds. The 5
All right,
minutes
5
is
minutes
for
is way
them
too
to
long.
fill the questions.
So that's just like the human being, but all that stuff just happens in a second, all the
Yes.
kind of going after the market. So if someone's been sued and you're trying to work out whether to offer them liability insurance, can you do that on your platform? Will you pick up if there's like kind of existing litigation or anything like that?
So to get information, if someone's been sued or bankruptcy or stuff like this, we need to go to external sources to get this information, and this call might take a second. This is why we're doing it while the customer is filling the information. Some other things like finding the website or do a search in Google whether the customer is even there or not, these are things that we can do really fast during the process, and all of these are inputs and data points that at the beginning you don't know if it's influence risk or not, but once you start to correlate the claims, you see very statistically significant information of things that we find correlates to claims. And by the way, vice versa, there's a lot of traditional underwriting that we've done in the past that on the macro level work, but on the micro level, when you look on every customer was, I would say, wrong. That proved to be wrong based on the data that we see. So there's a lot of notions that have been in the market for many, many years, but maybe they were right 20 years ago, and everybody still continue to assume they are right because there was no changes in the market. But when you look at it, these are not completely accurate.
So basically people in the industry are just filling in endless forms they don't actually need to be filling in, and you're trying to say there's an easy way of doing it, and actually you as an insurer are in a better place to get some of that data than they are, effectively. Exactly
correct, yes. And we also can collect a lot of customers about the data that an underwriter manually will have to do it, and it's for the price of the policy, it doesn't worth the effort. And as a result, these things are not doing. Our policies are to smaller businesses, so they're thousands of dollars a year. And there's a certain amount of time and effort that an underwriter can spend to underwrite this business manually, which this is how the market is done today. And it doesn't worth the effort. As a result, they're not doing it. And we can do it because we automate all of that.
And I guess when it comes to insurance, you've got two things you're going to worry about. How much you're paying out in claims, and how well you're pricing the business. So when it comes to your loss ratio, how does it compare to a traditional carrier? Are you able to get more accurate underwriting as a result of all the data you're using than traditional carriers will?
First of all, I would say that traditional carriers got it right by now. Like they know how to underwrite at the large scale and at the macro. Most of them are making money, so I wouldn't want to say anything bad about the carriers. However, when you go on a business by business, I don't think they have this information, and this is what technology can actually do. You can look on every business specifically and make the underwriting accurate, and we are doing it, and we're writing business profitably for our customers today, and we can easily differentiate between customers who are more risky and less risky and price them differently, every customer to their own, because we don't believe it's right, and this happens in the market, like customers who are good risk are paying for the customers that are bad risk, and it's not right for the customer. So on average, you get the right kind of loss ratio, but it's the right way is to do something like this, and this is what we're doing with the machine learning and the technology and the data that we have about the customers.
And and I guess it's a cheaper business model to run because you need less people to run it. So that means your expense ratio is lower as well.
That's correct. Our expense ratio is really low. It's actually close to zero because there's no human interaction anywhere per policy. It's 100% digital, underwriting done digital, servicing done digital, renewal done digital. So there's zero expenses per policies. We do have expenses because we are developing the business. We are kind of a new business, and we have expenses to build all the new products that we are building. But per policy, there is zero expenses beside the tax.
So you guys are from California. Is California your biggest state in terms of underwriting? What's been your kind of strategy as you roll out across the states?
I would say California is our biggest state because it's the biggest state.
Yeah.
But we write across the United States, and we basically distribute it based on the number of people who live in every state. So California is big, Texas is big.
So who are your big competitors then, would you say?
I would say can divide the market to several areas. One, there's the incumbents. And the incumbents basically distribute everything through the agents. And as a result, the agent is the competitor. So when we distribute directly, we compete against the agent. By the way, recently we allow agents also to access our platform, so we kind of, instead of compete with them, we also leverage them, because some customers do want to speak with agents. So if they want to go to an agent, they can speak with us. But I doubt that the incumbents can redo their own product. It's for each one of the incumbents, small business is a very tiny piece of their entire book. And if I were them, I would focus on car insurance, I would focus on life insurance, but small business is the most difficult to solve, because there is 1,000 different businesses and each one has its own kind of needs, and there's many different products. There's liability products, worker compensation, car insurance, property insurance. Very difficult to solve, and a tiny piece of the business. So I don't see the kind of incumbents are going into this. The second piece, there's a lot of online distributors. Companies that basically said, we're going to do the distribution online, but we'll sell the carrier's product behind us. I think this is a very challenging business model, although I do see some companies are successful in it. And the challenge in it is, one, you're selling products that you cannot control. You cannot control pricing, you cannot control underwriting, you cannot control the servicing. So you're basically selling what's available. The integration with the carrier is extremely complicated, because the system of the carriers are not really online. They have a lot of downtime. They're not digitalized completely. There's a lot of use cases. Customer cancel and then you reinstate, and there's a lot of use cases around this. Very difficult to distribute, and you're limited of what you can kind of do with the product. So you cannot improve. So this is kind of the second bucket. And then the third bucket, there's all kinds of startup and frankly some incumbents who said, we are going to go online. Like Berkshire came with the 3, and there's other startups who are trying to go and build the things from the ground up. And these are, I believe, are real competitors.
Yeah, so that's Berkshire Hathaway's 3. You've got AIG of something called Attune, which a lot of money has been poured into. So if anyone knows what's happening with that, please tell me, because it's a great story. So one really interesting thing about your business model is the fact that you're backed by some of the biggest reinsurers in the world have come and sit behind you as a business. So in terms of kind of, you can't get much better in insurance than from your reinsurance backers. I don't know if you want to talk a bit about that and how that works and why that's such an important part of your business model.
Yeah, we were lucky to work with Munich Re as our reinsurance. And they have been phenomenal because they understand digital. And they put this group that's called Digital Partners, and they are speaking more the same language as we speak. And they're open enough to allow us to do underwriting digitally instead of with an underwriter and a person. So they allow us to kind of grow our business, and we're willing to take the risk at the beginning for us to explore what we are doing. And when we started, we had zero data. So the reinsurance was really important. The second thing, it's really helped on capital, because we are an insurance carrier as well. But as a carrier, you need to have a lot of capital. But if you do a quota share with a respected company, you need less capital on our book, which is really help us. And we also get a lot of leverages with the states, because Munich Re is a very respectable reinsurance. So I would say that for every insurtech company, and there are, I would say, very few insurtech companies who are going all in, trying to disrupt the industries like we do. There's a lot of insurance companies trying to do niche products or maybe technology, but going all in and replacing the incumbents, there are very few. And in order to do this, one, you need a lot of money to raise because it's very difficult to do, but two, you need a very, very good reinsurance, because without it, it's almost impossible to do.
And that means, I suppose, if there's a catastrophe event as well, you're protected. You've got that reinsurance in place.
That's correct as well. Although in our case, small business insurance is extremely distributed, and it's not that there's no catastrophic events. It could be, but there is like in general liability, catastrophic events happen less. Or so there is a lot of distribution and good risk on small business insurance that allows to be a less risky kind of insurer.
Mm. So what's your take on the overall insurtech space? Do you think, I mean, you were one of the companies that raised a lot of money early on. Do you think that insurtech is overhyped, or do you think there's more to go? Are we in a bubble, or is there a lot more disruption to happen within the industry?
I would say it's underhyped. Like the market is huge, as you all know. And the opportunities are infinite. I think the situation today in insurance is suboptimal, like to say the least. Like it's a very, very bad experience, and there is a long way to do to improve basically everything. How you sell to the customers, the policy and the coverage, how you service the customers, how you handle claims. Like in every aspect of the chain, there's things to do, and there's so much expenses, like hundreds of billions, if not trillions of expenses that are unnecessary in the market. So there is still a long way to go to reduce the price significantly and remove a lot of those expenses. And I think this industry, kind of InsurTech, when I opened the company, it was a bit over 3 years ago. The term InsurTech I don't think was even exist. So it's very new. We are fairly at the beginning, and I think in 10 years we'll see few companies that are worth tens of billions of dollars and kind of replace some of the incumbents. I'm sure some of the incumbents will remain, but replace some of them.
Tell us a bit about your background as an entrepreneur, because this isn't your first rodeo, is it? Because you exited Intuit for $350 million, and this is kind of your second fintech in a way, isn't it?
Yes. So the previous company, I did a company in personal finance. It basically was a company that allows consumers to do payments from their phone and manage their finance from the phone. Today it looks kind of trivial, but when we started the company, we said we're going to do it on iPhone, and everybody told us we were crazy. Why are you doing something on mobile phone? Mobile is dead. These were the words that we started, and this was 2007. 2008, Apple launched. We were actually one of the first 200 applications in the App Store, and the rest was history. Like phone actually wasn't dead. So this was kind of a good learning of how the investment community on the entire world kind of thinks. Everybody said the mobile is dead because if someone here been enough in the industry, there was something called WAP, which was the first mobile technology, and it was really terrible. And until the iPhone and the new smartphone, there was not the new era. But when there is a new era, there's a big shift, and I think the same thing is happening now in insurance.
Yeah. So what's next for the company? What's your big focus at the moment?
So our vision, we want to be, I don't know if you can use the term, but we want to be the Geico of small business insurance. Like we think there's an opportunity to disrupt the market significantly and be a massive player. Today there's no brand or leading brand in the small business industry. If you'll ask a business who is your insurance partner, most of them will say Accord because it's the form that people are filling. It's the name of the company doing the form is Accord. That's the biggest brand. So there's an opportunity to build a big brand, and this is what we are aiming to, and we're going kind of all in on this. In order to do this, we need to become a one-stop shop for businesses. We want that a restaurant come to us, we give them the full service of what they need. Or if a lawyer come to us, they get everything that they need. And there's a lot of needs. There is worker compensation, there's property, there's a lot of types of properties. So there is kind of a matrix in small business of what type of businesses that you support and what type of insurance products you give to each one of the businesses, and roughly 20 different insurance that in many cases it's really different to distinguish what the difference between them, and definitely customers do not understand. Like general liability and professional liability, which is very difficult for customers to understand the difference. But what we are trying to do is to fill this matrix and basically be a one-stop shop, and the idea is that the business come to us and we sell them insurance for lawyers. We don't sell them general liability, we sell them insurance for lawyers, and this is kind of the direction that this company is doing, and we are developing all these products right now. And there's a lot of filing. You need to file in every state, and you need to file all the products, and you need to get approval. So there is a process to do it, and it's a significant effort, but it's also create a very significant value to the customers once we have for customers everything they need.
So how many different products have you got at this point? What point in terms of all the different
we have today 3 products: reinsurance product, we have general liability and professional liability that we combine together. We have commercial auto. We are planning to launch worker compensation in Q4, and we're working on property for the rest. And the idea is to sell basically everything. Kind of within a year, will be everywhere. All businesses, all the US, all the products. Kind of that's what we are aiming. And this is kind of the big opportunity of the next big thing. And in parallel, we are working on building a brand, and this is a lot of marketing and investment in marketing.
Yeah, and I guess you're a licensed insurance carrier. It's in the state of Delaware, right?
Yes.
And then you're an MGA in other states, which means you're selling somebody else's insurance as a distributor. Are you looking to use the Delaware paper more, become more of a established insurer? Is that the idea, or are you going to continue working as an MGA?
So just the difference between MGA and carrier, it's an MGA that we're using we have a fronter, which is basically we write the policy. We define the underwriting, we define the price, we do everything, but on the policy, it's the name of our fronter. And all we do is, when we move to our carrier, so we are a carrier in 17 states, and when we move to the carrier, we replace the name on the policy. Now, this replace the name is a process of, you need to file again. It's called a Me Too. We take the same product, we file it again in these states, but basically what we're doing, and the difference for the customer from that perspective, is the name of the policy. That's it. Entire policy, pricing, underwriting, everything is the same. So there's no difference between our MGA and the carrier.
So the customer probably wouldn't notice necessarily, whether
the customer wouldn't notice. It's the same for the customer. We are, as I said, we are a carrier in 17 states. We have very good relation with our fronter as well. And we are in the fronter on the rest of the state. And over time, we'll as we get approval on the carriers, this is a process that takes 3 years to get all the states to approve you.
How do you find dealing with all these regulators? You must have dealt with 50 different regulators. I'm sure some of them are in this room, but don't be too rude about them, or they'll take your license away.
I was not planning to be rude.
But what's your experience been about them?
I would say that my experience is overall good.
Yeah.
I think there's a shift that happened in the last 3 years. I think the regulators in the state heard the term InsurTech, are more open to it, and frankly allow us to write products. So last year alone, we filed 400 filings, and obviously we got thousands of objections from carrier. But there is a dialogue, there is a, why are you doing this? And there is also an education, there's a lot of things we're doing on the internet. And when you look on the laws, they were written, 100 years ago, and how do you interpret law X when it was supposed to be between two people and now it's on the internet? But I do see regulators opening, there is a discussion, there is an ability to do a discussion. In general, okay, there's some regulators that are really difficult to, and they are not, but in general, I would say that it's moving in the right direction. At the beginning, we had a lot of comments of, who is your underwriter in the company? Now, we didn't have underwriters. Still, we don't have underwriter in the company.
You have an algorithm.
We have algorithms.
Yeah, I guess you could name them.
So we told them, we have an algorithm. No, but who is the underwriter? And we said, we don't have an underwriter. We are not going to approve you. I said, but we... So we had to hire an underwriter to say we have an underwriter. But we are someone who's really good, actually. We got value out of it, but he's not really doing underwriting on the day-to-day. He's helping us on the underwriting. No, he's a super smart person. He's really helping us, but he's helping us train the algorithms.
Right.
He's not really doing underwriting. We're not doing underwriting manually.
And do you have actuaries on the team as well?
We are working on hiring one.
Okay, so if any actuaries, come and speak to Guy afterwards. We're going to play a fun game. You can probably guess what it is, but it's underrated or overrated. So let's start with blockchain.
Blockchain, underrated.
Underrated. Why is that?
Big opportunity.
Big opportunity. Okay,
yes.
It's good to find someone bullish on it. AI.
AI, overrated.
Why?
AI, it's defined. There are some companies who are doing super amazing thing with AI. Most companies saying AI without really understanding what they're doing. And they just call it AI, and there's a lot of, the algorithms of machine learning, the basic things, and what most companies doing on, it's kind of a commodity. The power is not actually in the algorithm, the power is in the data. And if you have the data, you can train the machines that are today are open source and everybody can use, and you can train kind of algorithms using the data to do smart things. As I said, it's a range. There's a lot of companies who are doing amazing things with machine learning, but I would say probably 90% of the people who say we're doing AI are not really doing AI. Maybe they're doing regression.
Cool. Two more of these. We've got 10 seconds left, but AIG.
No comment.
Lemonade.
Also no comment. I like them a lot, though.
Okay.
I think they are. I would actually say that Lemonade is visionary, and I think they are doing a lot of things that take the entire industry with them, and there's a lot to learn from them. And I think, regardless of where they end up, I think they are leading the industry in a very good way.
It's good. On that note, we'll leave you to it. Thanks.
Thank you.